What's up, everybody? And it is Friday. And it looks like it was a rebound day for the market. It decided to wake up, give some gains, but is this legitimate? You're not alone when you're trying to get through this noise and see, hey, is this a setup? Is this a bear trap? Is this a bull trap? One day it's the apocalypse. The next, markets are mooning. What the hell is going on? This has been the weirdest week, and quite frankly, the weirdest last month and weirdest start of the year, it feels like. Today, we're going to break down the insane rally today, why the markets ripped higher, Trump's tariff drama, and government shutdown fears, the real risk no one's pricing in. The biggest options trade today using our favorite Investor Central Club tool, and the dark pool trades that could change everything. Who's moving billions? Just a little teaser of what we're going to be looking at. We have billions in trades that have come through today. But let's go ahead and dive right into it. So it looks like the S&P 500 popped over 2.1% today. The NASDAQ went full send, like the podcast, with a 2.6% pop, and even the redheaded stepchild of the family, the Dow Jones Industrial, got in on the action with a 600-point pop. Now, big win, right? Time to pop the confetti, but not so fast. Is the real pain over yet? But if you want to know why stocks ripped today, number one, the government shutdown drama is finally starting to fizzle. Senate Democrats backed off threats to block a funding bill, and our crisis is temporarily averted for now. We had tech stocks that went absolutely nuclear, like they were built by Oppenheimer. Nvidia with a 6% gain, Apple with a 3% gain, QQQ was on fire, and AI bets aren't dead yet. We had gold cross $3,000 an ounce, I believe, and investors still don't trust this rally, or any women named Allie, and they're hedging with metals. So clearly there's still some uncertainty. We even have analysts putting a new target price on gold of $3,500. So be on the lookout for that. And bonds also had a slight sell-off today. Yields moved up, but not super aggressively. But there's no real major panic right now in the credit market. But here's what's lurking in the shadows, and what people aren't really pricing into the market and are kind of just turning a blind eye to right now. Trump just vowed not to back down on tariffs. The EU is retaliating, Canada is retaliating, and we could see a full-blown trade war that we are not prepared for, if we're being honest. This rally, again, like I said in the beginning, is this a bear trap? Is this a bull trap? Because this could be a bull trap. We have people who are confidently swinging puts on SPY, but as you're going to see later in the show, some institutions are just not fucking with that move because, yeah, just wait. Consumer sentiment is absolutely collapsing. Like, it's bad. Let's go ahead and look at some consumer sentiment from today. So the survey results hit 57.9, which is down from 63 last month. And people seem less enthusiastic than ever, and who can blame them? You can't afford groceries. You're scraping to get by paycheck to paycheck. 100K isn't what it used to be. And people don't want to spend money. Discretionary spending's down. Americans obviously don't love paying higher prices, and with tariffs coming into play, looks like we're not going to have a choice. Who would have thought this is going to go wrong? You can absolutely hear recession bells ringing in the background very lightly. I would not feel very confident about that. And it's like we're just trying to pretend that everything's fine and dandy. It's like the beginning of when two people want to get divorced. So, yeah. And here's a fun fact. Markets tend to rally before major legs down. Could this be 2008 all over again? Translation, if today's bounce was truly bullish, we'd see broad strength. Instead, this was a tech-led squeeze, with institutions still hedging heavily. Speaking of institutions, let's go ahead and dive straight into our options flow for the day. Now, looking at the options market for today, it looks like big money was back at it again, boys. We had Nvidia with 87.25 million in total flow today, with 79 million in calls against 8.2 million in puts. We had institutions loading up on AI exposure here. The biggest trade were the March 2025 $250 calls. Big money is betting that Nvidia smashes all-time highs, apparently. And the retail FOMO, maybe, but these bets were sized too large for small traders. In our industrial sector, XLI, we had 41.5 million in total flow, 24 million in puts against 17 million in calls. Industrials are catching massive bids despite trade war fears. Interesting. XLI typically lags, but this looks like rotation into defensive blue chips. $120 calls expiring. No, wait. Yeah, XLI had some bearish flow as well coming through on it. We had $125 puts, and we had about 13 million spent in premiums on these today, and that was at 10:16 a.m. Crazy. And then we had QQQ with 34.7 million in flow, with only 9 million in calls against 24 million in puts. It was a heavy mixed positioning. Bulls buying and bears are still in it to win it. The biggest trade were the $470 puts for March of 2025. Is this hedging or real bets against tech? You be the decision. Watch for a potential reversal here. Again, are we just being set up to be dropped on our face? Because that's how it kind of feels. Now, the S&P 500, we had 70 million in flow with 80% of the premiums being puts. We had big bets against the broad markets, and our most notable trade, and this is why I said they aren't convinced, the $530 puts expiring on May of 2025, which is a longer dated put as well, which should give you a little bit of indication of where we think the medium term projection for this market and where it's heading. Tesla, we had 22 million in flow with 76% in puts. Tesla's getting slammed by global tariffs and potential export restrictions as well. The $250 P for June of 2025, somebody is betting Tesla keeps struggling. And then we had IWM with 21 million in flow, with 90% of that flow being puts. Small caps are just getting absolutely destroyed, and it's not looking much better for them. The big bet is the $190 put for May of 2025. Someone is betting small businesses are going to struggle in this economy, which makes sense, especially with the tariff bullshit we have going on. The takeaway here, big money is still hedging even after today's rally. They don't trust this move up because, again, are we just looking at another 2008? Now, let's go ahead and talk about our dark pools. So for our dark pools today, let me go ahead and pull these up. Oh, there we go. So when we look at our dark pools, I think Vu had a big trade today. Yep, Vu's killing it right now. So in dark pools, we had 281 million in dark pool volume on SPY. Someone is offloading or accumulating silently in the background. Was this just a distribution day, or was this a legitimate move? We had Vu with 3 billion in dark pool trades today, which is insane. And that's in off-exchange trades. This screams massive rotation or big money starting to rebalance that portfolio after taking some hits to kick off this year. And then Amazon, we had 232 million in dark pool buying here. Yeah, Amazon, that was weird. AI hype cycle isn't dead. Institutions still love Amazon for some reason. Possible front running of a major AI announcement potentially. We're going to have to wait and see. The translation here is institutions aren't as bullish as they seem. They're making major shifts behind the scenes while everybody else out here is FOMO buying into calls and other aspects. Our final thoughts here is, where do we stand? What's going on here? Today's rally looks strong, but smart money is still skeptical. SPY and IWM are seeing massive put flows. Are they hedging, or is this actual bearishness? Are the bears in the woods? I don't know. We're going to have to wait and find out. Nvidia and Amazon are still attracting the bulls as well. But is this just huffing that hopium, AI hopium again? Because we've seen that happen one too many times, and we see how that turns out most of the time. And dark pool moves on VU and SPY. Big institutions are shifting quietly behind the scenes right now. This market is still on shaky ground. This rally could keep running, but the options in dark pool data say institutions aren't all in on this yet. And I can promise you one thing, if it's one person or one group of people that will not miss the train, it's going to be our big institutional buyers. So what do you think? Is this a real breakout or another bull trap? Comment your thoughts below. If you liked this video, make sure you like, subscribe, and turn on that bell notification so you never miss a Trades and Gains market retail update. I'm your host, Max Pitts. This is episode 122, and I will see you guys on Sunday for our weekly Outlook report. In the meantime, drop some comments below. Let me know what I should be looking at for next week. Other than that, see you guys in the next one. Stay diligent, stay smart, and don't blow up those portfolios.